Over a quarter of a century, there has been an elite group of companies that have stayed behind the spotlight, continue to grow, and to this day bring immense wealth for some of the most successful investors of our time, like Warren Buffett and George Soros. Just one of these stocks continues to make Buffett around $800 million each year in dividends, and that is what this video is about, because today I'll take you through the kings of passive income, the Dividend Aristocrats. I've taken the time to break down data from all 69 of these companies in order to find out what stocks are the top 5 performers to build passive income for yourself with these ultimate dividend growth stocks. Now, if you followed me from the beginning, you know that I have a big interest in passive income, and dividend stocks are a large part of my investments. So I've always had a fascination with the Dividend Aristocrats, and there is one that I've been invested in myself for about 2 years, but we'll get to that. Now, just remember that this is not financial advice. I'm just a guy on YouTube sharing my thoughts and my own investment journey. Always do your own research before making any decisions, and to take your own financial needs and risk tolerance into account. So, what makes a Dividend Aristocrat? First, it must be a part of the S&P 500, so it's already a large and established US company. Then the biggest rule is that the company must not only have paid a dividend, but has increased that dividend for at least 25 years in a row. That's a quarter century of consistent growth through all sorts of economic ups and downs. To pull off 25 years of rising dividends, a company needs solid fundamentals and consistent earnings to prove they can weather any storm. And for investors chasing passive income, this means reliable income and compounding dividends that can be a game changer over the long haul. And that's why you'll see them in the portfolios of Buffett and Soros, among others. So let's take a look at the 69 companies that make up that list, and I'll show you what data suggests are the top 5 performers, as well as the one stock that I'm personally investing in. Okay, quick break from the video because I've got something big to share with you. Our longtime partner XM just turned 15, and true to form, they're rewarding traders and investors. From 15 July to 15 August, you can earn unlimited cashback on your trades through XM's limited time promo. Just trade the selected assets, and the more you trade, the more you earn. It's that simple. Open an account today and join the promo before 15 August. Check out our link in bio, and it doesn't end there. XM are also running a 100% deposit bonus promo, giving you the chance to unlock up to $10,600 in total value. Here's how it works. 100% bonus on your first $100, 50% bonus up to $500, and 20% bonus up to $10,000. Whether you're just starting out or looking to scale up, this gives you more flexibility on your trades from the start. And if you're wondering why people choose XM, they've got tight spreads, no commission, and fast, reliable execution. Withdrawals are instant, support is available 24/7, and they're fully regulated. Plus, you can trade over 1,400 instruments, including Forex, stocks, metals, and more, all on one platform. So if you're ready to take your next step in the markets, check out the link in the description, explore the bonus, and trade confidently with XM. Just remember, your capital is at risk and T's and C's apply. Now, back to the video. So these 69 companies right here make up the club called the Dividend Aristocrats. And as you cast your eyes across them, you will definitely see some that you recognize, such as McDonald's, IBM, Johnson & Johnson, Pepsi, Procter & Gamble, Walmart, Coca-Cola, etc. Many of these companies continue to play a big part on the world stage, but just because they are large and have raised dividends for 25 years, it doesn't automatically mean they are a good investment today. In fact, some might be the opposite. That's why I have dug into the data and used Google Finance and Simply Wall Street to pull some of the main valuation metrics that we can use to partly judge our investment criteria. I pulled up each company, the sector they are in, and their ticker symbol. The first metric I pulled for each of them is their dividend yield. We can all agree this is an important part because it will show us how much the company will be paying us in passive income each year. Now, based on at least 25 years of raising dividends, we can be optimistic that each year these dividend payments will continue to go up. So here is the full breakdown of all the dividend yields of these companies. Just this table itself is a goldmine of information that takes a long time to put together. So if this information is helpful to you, please take 3 seconds just to like this video and maybe comment "great data" or something. Now, as you can see, although dividends increase, it doesn't mean the percentage itself is very high. Some are even under 1%. So let's make this table better, and let's take a look at the top 5 highest dividend yields of the entire Dividend Aristocrats. So there you go. our top 5 performers are all above 5% dividends, and for an S&P 500 company that has reliable payment increases, I think these are fantastic yields that of course compound over the long term. We've got Amcor at 5.66%, then Franklin Resources, Realty Income, T. Rowe Price Group, and Stanley Black and Decker. But dividend yields aren't the only thing. We also want to look at things like the 1-year and 5-year growth to see if the investment itself has grown. And as you can see, over the 5 years, only 2 of those stocks have increased their share value, and only 1 has grown its share price in 1 year and over 5 years. But again, dividend yield and share price are still not the only thing, because that shows us the present yield and the past growth. But a good indicator of whether a stock is valued correctly for the future is the PE ratio. Now remember, the price to earnings ratio means that the lower the number, typically the better value the share is because it compares the share price to the company's earnings. So a lower number is not definitive, but it's an indicator of better value. So first, let's see what stocks have the highest share price growth, and when it comes to 1-year growth, topping the list is IBM with an incredible 65% in the last 12 months. Then we have Cardinal Health, Walmart, Atmos Energy, and Abbott Laboratories. But none of these dividend yields are too impressive. Let's look at 5 years. Here, W.W. Grainger takes the top spot with 254%, then Cintas Corp, Cardinal makes another appearance here, then Nucor and Aflac. Again, some lower dividend yields because the share price grew so much. Then we have PE ratio. Remember, lower is better. So we have Dover Corp at 10.52, followed by Target, T. Rowe Price, Chubb, and Brown-Forman. Okay, let's take a step back for a moment, because right now we have a whole bunch of data. You're an investor. You're interested in passive income, and you're watching this to get some answers, right? So let's simplify, and let's find some real stocks that we can really invest in. We're all different, but I'll show you what I look for and which Dividend Aristocrats I would consider investing in and which one I actually have in my portfolio. So first of all, I would want a dividend yield of at least 4%, so let's take away the rest. The 1-year return doesn't mean too much for me because as a long-term investor, I'm more interested in 5 years and more. So let's reduce to include only those with 5-year growth. And that leaves us with my personal top 5 Dividend Aristocrat stocks: Franklin Resources, Realty Income, Federal Realty Investment Trust, Chevron Corp, and PepsiCo. The next thing I will do is zoom out and look at their max share price graph, again to look at the long term. Now, Franklin Resources has been going down since 2015, which is 10 years, so I don't like that, and Federal Realty is about the same. Pepsi is very interesting. It's had 38 years of great growth, but currently is down a lot since last year. It seems to have more risk, but might have more opportunity, so I would need to read their annual reports, but it's interesting. Chevron to me looks like a good option. It continually has gone up over 40 years, but it also deals in oil, which can be uncertain today and depends on who is president and what conflicts are happening in the Middle East. And lastly, I swear I didn't make this up, is Realty Income. Not only does it have one of the top 5 dividend yields by data, but it has positive growth for 1 year and 5 years, and this long-term growth shows a trend of steady share price increases for 30 years, and of course increased dividends for at least the last 25 of those. And if you haven't guessed already, Realty Income is a company that I have been investing in for the last 2 years. Now, it's not all sunshine here. This stock has been down and up in the last year, but it's something I'm using to build passive income for the long term. So, there you have it, a breakdown by the data of 69 Dividend Aristocrats. Remember, there are so many other factors when it comes to stock investing, and my analysis is not comprehensive, so if you found any of these interesting, be sure to research them in depth in your own time. But thank you for watching. Please like the video and subscribe to see more. Comment, great data, and I'll see you again on the next one.